wherever you go, this double entry is literally gonna be up onto you, right? So we have to very much strongly clear our concepts, right? And we have to build our base. And it's relatively straightforward, but again, at times we do happen to have a bit of a difficulty in as far as understanding is concerned. So we'll go with the normal pace and we'll try to understand it up to the maximum as we can. Okay. So let me just share my screen. Most funny thing, before I could say, you yourself said that it's gonna haunt you up, huh? That is the best way. Okay. Now, okay. Financial accounting. We have the definition as it is the recording, summarizing, and presentation, right, of financial. Overall, in this recording phase is something we are onto it, and the way to record into the accounts is basically via the double entry, right? The way to record into the accounting is via the double entry. So we are going to have this over here. Okay. So we have the transactions outcome. The outcome either is going to increase or either it's going to decrease. The outcome is asset, expense, income. Then we have liability, and then we have capital. Now, either at the end of the day, because of the transaction, the assets are either going to increase or decrease. Huh? So the rule is whenever the assets increase, they are always going to debit, and when they are going to decrease, they are going to be called as credit, or they'll go for credit, right? Similarly, as expense increase, it will be debit, and when the expense decrease, it will be credit. For income, when it increases, it's credit. When it decreases, it's debit. And so is the case with the liability and the capital, that when they increase, they get credit, and when they decrease, they get a debit, right? Now, last time we did happen to see one of the transaction called as Mr. A started business with $10,000, right? You remember this transaction when we were doing the accounting equation? We wrote this transaction over there. Now, if we go by the rules over here, now this 10,000, if I try to apply the duality concept over here on this 10,000, this 10,000 is cash, right? Cash is at the end of the day is the asset. So basically one asset is created over here. Similarly, this in 10,000 is basically being invested by the business. So this investment is also called as the capital over here as well, right? Because it's investment by the owner now, so it's a capital. So if I look at this transaction, the dual effect of this transaction is that an asset is created in the business and the investment or the capital is also created in the business as well, right? So technically, if I look at the asset, right, out of this transaction or because of this transaction, the asset is increased or is created in the business now. So I can say the asset will debit over here the cash 10,000. Similarly, the capital is also created, or first time it's creating or increasing itself. So the credit is going to be the capital over here with the 10,000, right? Now, the question comes how to write the double entry. How to write, right? How to write the double entry. The rule for writing the double entry is that in the top line, you write the debit entry as you are going to debit the cash over here as 10,000, right? And then in the second half or in the second line, you are going to leave this space, a bit of a space on the left side, or either one tab, and then a bit on the right side, you are going to credit the capital with 10,000, right? So the way to write this is that you write the double entry, or you write the debit entry first on the top line. Then in the second line, a bit right aligned, you write the credit entry. And while writing, we normally don't mention the debit or credit. I mean, we just simply write cash 10,000, and in the second line, we write the capital as 10,000, right? And when we simply do so, the rule is simple, that we write the debit entry on the top, the credit entry in the lower line, and a bit of the right side, right? This is a way of recording. And whenever I'm going to record this way, any entry which I've written on the top line and the entry which I've written on the in the second line and a bit towards the credit side, by default, this is the rule, that the top line entry is the debit one, the second line entry, which is on the right side, which is basically on the right aligned side, this is going to be the credit entry, right? So this is the rule over here if we talk about. And when we have to, say this entry, now when we say this entry, like for example, if I ask you that what is the double entry for this transaction where Mr. A is starting the business with $10,000 now. So when it comes towards saying, you will say cash to capital. You will say cash to capital, TO2. Okay. You will say cash to capital. This TO2 is only used while saying the double entry, while telling the double entry. Okay. This 2 is not used to write. Okay. So that's why I've written it with the, the trackpad, that this is cash to capital, right? So the rule for saying the double entry is that we always say the debit entry first and then we say the credit entry, right? Like for example, paid electricity bill 500. We have paid the electricity bill 500. So see what happened over here. When we are going to pay the bill, our expense is going to happen, right? Our expense is going to increase now when we are going to pay off the bill, right? So expense, if we talk about this, if we look over here, if I go, let's just choose this view and freeze band. Okay, now if I go over here, I've paid this electricity bill. Now you always have to, keep this the table with you all the times. Okay, you always have to keep this table right in front of you when you are doing the double entry. Either you know it or not, just for the sake of practice, have it right in front of you, so that you are very much clear and familiar that what is happening. Okay, so paid electricity bill 500. The double entry for this is going to be, because if we have paid the bill, so our expense has increased. So whenever the expense is increased, it's always going to debit over here. So we are going to debit the expense with 500, and then we are going to credit the cash with 500. Now, why have I credited the cash over here? Because I paid the bill. So obviously, in order to pay the bill, I will have to pay the cash. So if I'm paying the cash, my asset cash is going to decrease. Like for example, if you have 1,000 in your pocket, you go out and you pay the bill. So technically the amount which you had with you, right? Or the amount of cash with you. I mean, at first you had 1,000 with you, na? And then obviously when you have paid the bill, you are left with the 500 only. So the remaining cash in your pocket is only 500, right? So there has been a decrease in the cash in your pocket, right? So the entry is going to be expense debit and cash credit over here, right? Okay. And then similarly, I mean, if we go by the second entry, that is, we can have bought goods on credit from Mr. A. You bought goods on credit. Now, the word goods in accounting, it refers to anything anything acquired for resale purposes. Anything, but rather not acquired. I would say anything we have. Okay, anything we have for resale purposes. So technically, when we are going to buy the goods, when the goods are bought, we buy. It's a purchase. It's an increase in expense, right? Similarly, when the goods are sold, they are income, right? And that is going to be like, when the goods are sold, we say it's a sales and it is going to be recorded as an income, okay? Remember, although the goods are inventory, we have the assets over there and all, I agree. But for the sake of the double entry, now if we talk about the double entry has been done over here from the point of view of the purchase and the sale, purchase being the expense and sales being the income. Okay. Like, if I go into the rules, or if I talk about the rules over here, now, the rule is simple, that the inventory, or we do not pass the double entry of the inventory. Okay, inventory or stock, we do not pass the double entry for the inventory or stock. We always pass the double entry from the purchase or the sales point of view. Okay, we do not pass the double entry from the inventory point of view, from the asset point of view. We pass the double entry from the expense and income point of view. Remember this thing in your mind, okay? We always go for the expense and income over here. Done? Okay. So we bought the goods from Mr. A. The entry over here is going to be, we are going to debit the purchase, and then we are going to credit the Mr. A. Now, why purchase is being debit? The purchase is debit over here in the context of increase in expense, and Mr. A is credited in the context of increase in liability. Why? Because I bought the goods on credit, right? On credit means I haven't paid for the goods, so I have to pay for the goods. So if I haven't paid for the goods, and if I have to pay for the goods, then sooner or later, if I have to pay, it is going to be my liability. Okay, so over here, Mr. A is going to be recorded as a liability over here. Done? I hope it's clear. Now, let me just copy a couple of, the exercises over here, and then we'll do the practice. Okay, now, so we have this exercise. I hope you guys can see it as well. Okay, just zoom out. Uh-oh. Okay, now let's see. Bought goods on credit from T. Morgan. Let's just have it over here a bit. Okay, now bought goods on credit from T. Morgan. So first one is we bought the goods now. And just 1 second. Just 1 second, I have to see. Okay. Goods bought on credit from T Morgan. We bought the goods on credit from T Morgan, right? So the double entry is going to be, we are going to debit the purchase, right? And then we are going to credit the T Morgan over here. The rule is simple, okay? The rule is simple. We always write the double entries debit half in the top left, and the credit entry is always written in the second line with a space on the left side towards a bit towards the right side, okay? So we are going to debit the purchase over here. We are going to credit the T Morgan over here. Purchase is going to debit over here because it's an increase in expense. And T Morgan is credited over here because we bought the goods on credit from him. So we have to pay him sooner or later. Nah? So that's going to be our liability. Then the second one is goods returned to us by J. Thomas. So now J. Thomas has returned the goods to us. At first, he is going to buy the goods from us and then is going to return to us. Na? So technically, we must have sold the goods to J. Thomas. So that is why now he is returning. We must have sold the goods to J. Thomas. This is why he is returning to us, na? Right? So in order to learn the reversal entries, we have to learn the straight entry first. So for these questions, for now, what you have to do is first pass the double entry for the straight work or for the straight entry. Like for example, means we must have sold him in the past now. So first pass the double entry for the sale, right? So if we have sold the goods to J. Thomas, then what would have had been the double entry? The entry would have been J. Thomas debit and sales credit. Why J. Thomas debit? Because this is increase in asset, and sales, they are increase in income. Now, as he has returned, so our sales will come back. So we'll debit the sales return and we'll credit the J. Thomas over here. Sales return is going to debit over here as this is a decrease in income, and J. Thomas is going to have a credit over here because this is going to be a decrease in asset over here, right? Then we have the C over here. Now, machinery returned to L. Jones. Now we have returned the machinery. Over here, we sold the goods. So these were the sales. Now we have a machinery which we are returning. The machinery is a non-current asset. So we record the non-current assets with their names. And as we have returned, we are going to debit the L. Jones account because this is going to be a decrease in liability because we have returned the machinery to the company now or to the person. So this is a liability now as decreased because we were supposed to pay him. But if we have returned, right, so we are not going to pay him, right? So this is going to be a decrease in liability. And then the machinery is going to have a credit as this is going to be a decrease in asset over here, right? Then we have D over here, that is goods bought for cash. Now we have bought the goods for cash, right? So it's gonna be purchase debit as an increase in expense because when we are going to buy the goods, our expense is gonna increase. So we are going to debit the purchase and we are going to credit the cash. Why cash is credited? Because this is a decrease in asset because when obviously you are going to buy the goods, an expense will happen. So this is going to be called as a decrease in asset, right? Then we have van bought on credit from D. Davis. Now we have bought a van. Van is going to be a non-current asset, right? So we are going to debit the van as an increase in asset, and as the van is bought on credit from D Davis, so we are going to credit the D Davis as a increase in liability over here, right? So let me just sub now cut and bring these more down over here like this. Now, F is goods returned to us by iPrints. Goods returned by us, not to us. See, I was reading it wrong. Goods returned by us. Now, to us or by us, this is really very important that you understand what the narration is written, because if you are able to understand that what is happening in as far as the the transaction is concerned, if you are able to identify that what is happening in the transaction, then you will be able to record it proper, right? So you have to be really very careful about as far as understanding, or you should be vigilant about in order to identify that what has actually happened in the transaction, right? And remember, we always interpret the transaction from our point of view, or business point of view, not from the other point of view or from the other party's point of view. Like, for example, we have returned the goods, right? So we are going to say that we have sent him the goods back, not that he got the goods back from us, right? The double entry, when we have to do, we are not going to talk about from the other person's point of view, right? Like, for example, previously, if C van bought on credit from D Davis, so we are going to say we bought the van on credit, we bought the van from him. We are not going to say that D Davis has sold the van to us. No, we are always going to do the double entry from our point of view, okay, not from the other party's point of view, right? Now, goods returned by us to iPrints. Now, we have returned the goods to iPrints now. So technically, we must have bought, the goods from him. So that is why we are returning, right? First, we technically are going to buy the goods, right? Then we are going to return it now. So technically, when we bought the goods, we are going to debit the purchase, and then we are going to credit the iPrints, right? iPrints is being credited over here because it's an increase in liability. Now, as we have returned the goods, so iPrints debit and purchase a return credit. iPrints is going to debit because of decrease in liability, and purchase return credited because of decrease in expense. Okay, so that is why we are going to have such entry over here. Done. Then D Picton paid up his account by check. So he paid us. We got the check from him now. So when we are going to get the check, we are going to deposit the check in the bank. So technically, when we are going to deposit the check in the bank, our bank balance is going to increase, right? Our bank balance is going to increase. It means our asset, the bank, is going to have an increase over here. So we'll debit the bank, and obviously he has paid up his account. So now that depicted asset is gone, or it's finished, or it's decreased. So we are going to have a decrease in asset over here, and that is the depicted, right? And then goods bought by check. We bought the goods, so we are going to debit the purchase, and we are going to credit the bank over here because we have paid the check now. So if we have GHI, so if we have paid the check over here, so our balance is going to decrease in the bank. Similarly, we paid creditors beyond by check. Now we paid, when we are going to pay, our liability is going to end or it's going to decrease. So be Henry debit right? And the bank is going to have a credit, right? And then J, goods sold on credit to J Mullings. We are going to debit the J Mullings, and the sales are going to get a credit over here because we have sold the goods to J Mullings, right? Okay. I hope it's clear. Now, if you have any question or anything related to this double entry, you can ask me. Otherwise, we are good to go. Any question, anyone? I would like to have an input from you. Okay, meanwhile, you say something or give your input. Let me just copy up another exercise over here. Okay. Okay. So Ms. Amira is saying, so far, no question. Thank you. Thank you so much. Okay, and who else? No questions. Okay, thank you. Okay. Taiwan free is dead. I'm gonna scroll down a bit. Okay. Actually, I don't know how or what, but I have a terrible. I mean, one is terrible, one is terrible raised to power terrible. Today I'm having a very bad backache. I mean, I'm having a very terrible pain in my lower back. I don't know why and what happened. It just started out of the blue in the morning when I was in the office. So it was really very difficult even for me to sit over there. And even when I sat in the car to come home, I was finding it myself very difficult even to accelerate the car. Right. And now I'm just sitting like a statue over here on the chair. And believe me, I mean, I'm not able to move or something. Maybe because of the weather or something. I just got my muscle pull or something. But seriously, this is we always take ourselves and our health as for granted or something. But every inch and every the whole body, the whole system. I mean, it's a blessing. And even if we normally don't think about it like in this way, now I can feel I don't know why or what, but just a muscle, in your body, maybe muscle has been pulled or something. See, I mean, teeny tiny part, but still, how it's disturbing you like anything. Anyhow, this is the Van Bottom credit from H. Thomas. Van Bottom credit from. Okay, we have this different one. Okay, this is the different exercise. Okay, now what I'm going to do is, but rather, what you guys are going to do is, I'm going to call your names one by one. You guys are going to look at the double entry. Then you are going to tell me that why and what double entry is going to be. Like, for example, what are you going to debit? What's going to credit? I'm simply tell me the double entry, and then you have to give me a justification as well. Like, for example, I'm solving the first one for you. That is goods bought on credit from J Reed, right? So the double entry for this is going to be purchase debit and J Reed credit. Why? Because purchase is an expense when we are going to buy the goods now. So the expense is gonna increase. When the expenses increase, it's always going to be a debit, right? Similarly, we have bought the goods on credit from him or the JD na. So it means we have to pay him. So it means if we have to pay him, it's our liability over here, right? So the entry is going to be purchase debit and JD credit over here. Done? So that is how you have to explain it to me. Done? Okay. So let me just again freeze this up. Okay, why is it down over here? View. Yeah, I have frozen the pan over here. I'm just setting my just toolbar over here. Okay, okay. Here we go now. Okay, here's the second one now. So I just like freeze the pan over here. I mean, this table over here for you guys. Now we have this is Reach. No, you told me your name. I forgot your name. It was what, Raj? No, I don't remember. Can you unmute yourself? Oh yeah, Kunal. Thank you. Kunal, why don't you rename yourself as Kunal? I mean, your name or why reach? Yes, Kunal.
Are you listening to me? Hello?
Yeah. I was saying to you, Kunal.
Okay.
Kunal, rename yourself because this
Yes, I
this
will. I
name.
will rename. I'm going to rename. Yes, I'm going to do it.
Yeah. By the way, what's your name? What you have written over here? What's this? Is this your name or this is your short name or something? I mean, it's not
If I
short.
tell you, if I tell you the full form, you will be astonished.
Yeah, it's okay. You can tell me. It's okay.
Yeah, it's Yudhishthir Rizan Singh.
Okay.
Yeah.
Honestly, I didn't get it. So, so you can rename yourself as like Kunal. Okay. While you do that, I mean, you can do it later. But tell me, for this second one, goods sold on credit to B Parkins, what should be the double entry over here?
We credit our income.
Okay.
So we credit our income and we debit uh, B Perkins.
Okay. So you are saying I should debit what? B Parkins? Hmm. This is what you're saying. Now I should debit B Parkins over here.
We did a sales, we debit our income.
No, the income when it's increased. What happens to the income when it increases? Look at the
Credit our
table.
income.
Yes. So what is going to be the income over here? The name of the income.
B Perkins.
So you're saying I should credit the B Parkins over here. This is what you're saying?
We credit the sales, we debit the B Perkins.
Yes. We debit the B Parkins. We credit the sales. Done. Now,
Mhm.
why are we debiting the B Parkins over here?
Because we
That is
have
some.
sold goods on credit to him.
So I mean, if we have
We
sold the goods,
have
what?
increased, we have,
Hmm.
when we have sold goods, we have decreased our asset.
Huh? Listen, when we have sold the goods to him, right, on credit, so it means today, tomorrow, day after tomorrow, somewhere in the future, we are going to get the money from him now,
Yes.
right? So if we have to get the money from him, right, sooner or later, so it means we are going to have an inflow of economic benefit from him. It's probable now we are going to get. So B Parkins is our increase in asset over here. Okay. B Perkins is going to be recorded over here as our increase in asset, and sales, they'll be recorded as a increase in income. Okay, getting my point? When we are going to sell the goods on credit to him, we have to get the money from him now. So he's our asset. It's an increase in asset. So we'll debit the B Perkins, and then the sales, they are going to be my income over here. Okay.
Okay.
Okay. Now, yeah. Kunal, you were saying something.
No, I'm okay. I'm okay with that.
Okay. Okay, next one. Van bought on credit from H. Thomas. Miss Amira, can you please unmute yourself?
Yes, we debit one since it is an increase in asset,
Okay.
and we credit H Thomas since it is a liability, an increase in liability.
Okay. As far as for the van is concerned, you were sure that we are going to debit the van because it's an asset, right? But as far as for the H. Thomas is concerned, are you asking or are you telling me that we are going to credit the liability?
Credit since it is a liability.
No, you are asking or you are telling.
Telling.
Okay, so tell it like in a firm way, na? Don't say we'll credit the H Thomas because it's a liability. Say like this, it's a liability, so we have to credit, right? Be sure about that. Okay,
Yes,
very good. Very good.
thank you.
Very good. It's an increase in liability. Yeah, very good. Van debit because it's an increase in asset, right? I'm writing these down for you because I feel like that I should write these down for a couple of exercises so that you guys are like, familiar with this. Then, goods sold, a check being received immediately. Mihir, please unmute yourself.
Debit back because it is an increase in asset.
Okay.
Credit sales because it is an increase in income.
Okay, very good. So goods sold, a check being received immediately. So it means we have sold the goods, right? So we receive the check. So the check is gonna go into the bank now. So bank is our asset. Asset increase, it's gonna debit. So bank increase in asset, and then we are going to credit the sales. Why? Because they are increasing income. Very good. Very good. Okay, then next one, it's very simple. Good sold for cash. Who's the lucky one? Let's see. Pagwa.
We debit cash because it is an increase in asset, and credit sales because it is an increase in
Okay,
income.
very good. Very good. So we debit the cash and then we credit the sales. Cash debit because it's an increase in asset. Sales credit because it's increase in income. Okay, I feel like this was relatively straightforward. So, Miss Pagwa, why don't you do the other one, the next one as well?
We debit HOD because it is a decrease in liability, and we credit return outwards,
Okay.
purchases returns.
Yeah, purchase done outwards. Very good. See, this is an accountant sitting over here among us, huh? Very good. Very good. Very good. Absolutely right. Now, one request. When you are going to tell me the double entry now, first you are going to read the statement so all the rest of us know as well that what has just happened over here. Because it's not about the game only. It's not the only game that we tell about that what the double entry is gonna be. I mean, Ms. Pagwa, you are absolutely right. I can sense the way you just told me the entry now that you have some like basics or you have a strong base as far as for the double entry is concerned. See, I straight away got the idea the way you told me the double entry. But for the rest of us, who are kind of new to this now, so what we all are going to do is when we are going to tell a double entry, before that we are going to read the statement, we are going to explain what happened over here, okay? And then we are going to pass the double entry. So you are 100% and absolutely right. Then we were the goods purchased by us, we purchased the goods, and now we have returned. So we are going to have H Hardy over here as a debit, because this is going to be a decrease in liability now, because we have returned the goods. So we'll debit the H Hardy, and then purchase return is going to have a credit over here, because this is a decrease in expense over here. Very good. Okay, then machinery sold for cash. Umi Sharfa,
We debit cash and
what
we
happened
credit
over here? First, tell me what happened over here.
machinery sold for cash.
Okay.
Selling the machine to receive cash. We debit cash
Okay.
because increase in income.
Cash increase in income. So if we have an increase in income, don't you think it should be credited?
Yeah, increase in asset.
Yes. Cash is an asset. Very good. Very good. This is an increase in asset, right? What should we credit now?
Machinery
Why?
because there is a decrease in no assets, no
What is the machinery?
capital.
Uh-uh.
It's a non-current
Machinery.
asset.
Yes. So if you are going to sell it, what's going to happen? You were right. You were right earlier. You were right earlier. I mean, if we sell the machinery, then what will happen? This is a
Decrease in
decrease in.
income.
Uh-huh. See
Capital,
what you said earlier.
capital.
The machinery is a non-current asset, right? So when
Yes,
you are going to sell it off, what will happen? The decrease in
liability
asset.
or asset. Okay.
Yeah, it's gonna be decrease in the asset. That's it. Because if the machinery is an asset now, non-current asset now, so obviously we are going to do the double entry from the asset point of view. So when we buy, it's an increase in asset. So when we sell, it's a decrease in asset. Okay,
Yes.
done. Very good. Very good over here. I mean, I'm happy that you are good with the double entry. It's okay. You'll learn the justification, because I have seen I don't know, I mean, you from the universities as well, you are the university grads over here as well. There are certain books which I have read, you know, I won't say them wrong over here. I won't say the wrong over here. But many of you might have learned the double entry as what comes in is debit, what goes out is credit. How many of you have learned the double entry in this way? That what comes in is debit, what goes out is credit. Who has learned the double entry in this way? I mean, the ones who have read the accounting before, how many of you have read this way? I mean, you can either raise your hand, or you can either write it into the chat box. Okay, I got the one. Yes, Kunal. Kunal has read this way. Mihir has read this way. See, and what about the other ones? See, Amira has read this way. See, I told you, this is a worldwide dilemma, right? So this is a worldwide issue over here. Even over here in the universities as well, right? I have my some parallel batches running of the MPhil, even for the MPhil or the MCom or for the BBA as well, right? The bachelor's programs. I mean, the students who come to me into the advanced papers now, I find it really very difficult, to make them understand and all. And over here in the farm, when I do the interviews, normally I used to do the interviews earlier for the articles for the CA students and for the ACCA for the internship programs as well. Now, at first I used to do, and I like it was seldom that I used to hire somebody. Now, so my the boss, he literally stopped me for taking the interviews because he had this opinion that I don't like anyone, so I don't hire anyone. And what I only used to do was I only used to ask 3 4 basic questions about what the name of the candidate was. I used to ask from the candidate that what's your name, how many attempts you had so far in the CA, or how many time it has been, for how long you have been as an ACCA student, while coming over here and all, right? And the third question was that if I sell the goods on credit, if I sell the goods on credit to Mr. A, then what is the double entry and what is the justification for that, right? And I only look for this justification, okay, if it's an increase or if it's a decrease, right? So if the students who are able to explain me like this, I used to hire them. And the students who are unable to, I normally don't use to hire them, right? Because I believe, fine, you can go for the rot system and all, but this is not a logical approach to say that whatever comes is going to be debit and whatever goes out is going to be a credit. No, it's not the rule. It's not the rule, right? Now when you are going to grow up now, this same very rule I'm going to ask you, like say in case you sold the machinery for cash and you had a loss on it as well. So what's the double entry is going to be there, where you are going to have more than 2 outcomes in a transaction. So how are you going to do the double entry over there? Over there, this goes in, goes out concept is gonna will be blown away, right? So I respect and I understand. It's okay. It's okay. See, this is the learning we have to do. This is the concept we have to learn, and this is the concept that we have to get our grips onto. This is what we are over here, right? To go with the proper logical way, right? And then we are going to have a proper understanding about this, that how we are supposed to have our approach onto this and all, right? Now, okay, then we have machinery sold for cash. And now Vidad, tell me the H1.
Debit sales returns and we credit G Nelson.
Debit sales return, credit J Nelson. Why?
For G Nelson, it is an increase in liability.
What?
For G Nelson, it is an increase in liability.
How? How liability? I mean, we are returning the goods, huh? Sales return is going to be a decrease in income. I mean, we had sold the goods, nah? We had sold the goods because goods sold returned to us. The customer has returned the goods to us, nah? So if he has returned the goods to us, so it means our income has decreased. Our income has decreased, right? So if it's a decrease in income, it is going to be debit over here. This is decrease in income. And then J Nelson, you credited the J Nelson over here. Why? Hmm? Look, we were supposed to get the money from J Nelson, right? We were supposed to have an inflow of asset from the J Nelson. But as he has returned the goods to us, we are not going to get anything from him, right? We are not going to get anything from him now. So that is a decrease in asset, okay? So this is decrease in asset. Done? Okay, the next one, goods bought on credit from D. Simpson. Without, tell me this one. You are going to tell me without. Come on, goods bought on credit. G.
Debit bank and credit D. Simpson.
Good bought on credit from D. Simpson. You are saying that debit bank, credit D. Simpson. Why?
Bank is an increase in asset,
Okay.
and D. Simpson is an increase in liability.
Okay. But tell me, where is the bank written in this? In this transaction, where is the bank over here?
On credit.
So, on credit what? What happened on credit?
The goods were bought on credit.
Yes. The goods were bought on credit, na? So we bought the goods. So what's the link of the bank over here, by the way? We bought the goods. I mean, there's no bank over here, right? We did not take a loan from him. We did not take a loan on cash from him, na? If we would have taken a loan in the form of cash or in the form of the check, then the bank would have been here, na? We have bought the goods. So when we buy the goods, an expense happens. Okay? When we buy the goods, an expense happens, right? An expense is incurred. So we should debit the purchase over here. We should debit the purchase over here. And the purchase is going to be increase in expense over here, right? And D Simpson, it's going to be increase in liability over here, right? Then the next one is goods we returned. We returned. We, right? We returned to H Forbes. We have returned the goods to H Forbes, right? So what's going to happen? We have returned, so it means we must have purchased from him now. So that is why we are returning. So the entry is going to be H Forbes debit. This is H Forbes debit, and we are going to credit the purchase return over here. H Forbes is going to debit over here because this is going to be a decrease in liability. Purchase return is going to credit over here because this is going to be a decrease in expense over here, right? I hope it's clear. And you guys need more practice, so let me just copy more questions. I'll go for this one because I feel that you guys need more practice. So, okay, we'll go over here. Here we go. Okay. Okay. Now let's start again. Miss Amira, please unmute yourself and tell me the first one.
Bought a machine on credit from A.
Yeah.
Debit machinery, since it is an increase in asset, and we
Very good.
credit A since it is an increase in liability, which we will have to pay later on.
Good job. Good job. Good job. Increase in liability. Very good. And machinery is increase in asset. Very good. Okay. Second one is Mihir. Bought goods on credit from B.
Debit purchases because it is an increase in asset. And credit B because it is an increase in liability.
Okay, increase liability. Done. And you said purchase is increase in asset. Now tell me one thing. Hey, do you do the grocery by yourself? I have to ask.
Yeah.
Okay. When you do the grocery and say in case if some family member goes with you, right, for the grocery or something, and if they end up buying something extra which was never there in the list which you were supposed to buy and all, right? And you end up spending some extra amount, right? And obviously, if something is kind of out of your budget, so when you come back, what do you say? Or what do you express? How you express yourself as, in a refined words, if I ask? I do you say that, this month we ended up buying more assets, or you say this month we ended up having big expenses and all. How do you say?
Big expenses.
Yes. So what is a purchase?
Increase in expenses.
Yes. See, goods we buy, we purchase, they are an expense, not an asset. Although you are 1000% right in the context of the inventory. The inventory is an asset. You are 1000% right, but we don't do the double entry of inventory, right? The double entry of inventory is not done from the assets point of view. It's done from the expense or income point of view, right? Because we don't do the double entry. Let's just talk about the advanced concept over here right now. I have to clear it up. We don't do the double entry from the asset point of view because we cannot have a proper track record of which actual item of the inventory is purchased at what time and what actual item is sold at what time. Like for example, you buy the 100 units, and then you sell the 20 units. So which 20 units out of those 100 you have sold? I mean, if the units are all identical, right? So which 20 units you have sold? It's impossible to track, or it's going to be really very costly to track, right? So we cannot have a proper track record. And then even if we do, assigning the value to the inventory is concerned, it's a very difficult thing because this is the only asset that we have which is in a huge quantity with us as compared to the other assets. So having keeping a track record of each and every item, it's really very difficult. Okay, done. So that is why we record it from the expense or the income point of view. Okay. Then we have Pagwa.
Sold goods on credit to C value $1,200. We debit C because it is an increase in asset, and we credit sales because it is an increase in income.
Bravo. Very good. Very good. It's an increase in asset. And then it's a increase in income. Very good job. Very good job. Okay. Umi. The next one, please.
Pay the creditor $300.
Hmm.
We debit the creditor. Either for credit, we credit the sales.
Where is the sales written over here? Look what is written over here. Try to understand what is written. Explain. Leave the double entry. Leave the double entry. Leave the double entry and tell me what is written over here.
Pay the creditor.
Yeah, explain it to me.
We are paying the
Exactly, absolutely right. We are paying the D. Now, in the bracket, it's written a creditor, right? Who is a creditor? Who's a creditor? Yes,
The one
you
we owe.
remember? Huh?
Is the one we owe.
He's the one what?
We owe them.
Yeah, we owe them. Exactly.
Yeah.
The creditor is the one from whom we buy the goods on credit, right? This is a creditor. So when we are going to pay him, Mesumi, when we are going to pay him, what will happen? We were supposed to pay him, na? So we paid him. So when we are going to pay him, what will happen? Our liability will decrease, right? Our liability will be decreased. And when the liability decreases, it's always a debit. So Mr. D is going to be a debit over here, right? And how did we pay him? We pay him the cash.
Cash.
We pay him the money. So the
Yes.
cash is going to be credit over here. So Mr. D is decrease in liability. Cash is decrease in asset. Done? Okay. Umi, you again collected one from E, a debtor. Umi, come on. Umi, you there?
Yes, I'm here. We debit E.
Okay. Just relax. Don't like, overwhelm yourself and don't panic or don't get stressed, okay? It's perfectly fine. It's okay. It's okay. It's perfectly fine. Right? Just be calm and relax and see what has happened over here. First, try to understand what is happening in the entry. See, collected 180E from a debtor.
Cash. We are
Hmm.
collecting cash from E.
Hmm.
We debit cash
Hmm.
and we credit E.
Yes, absolutely right. You are 100% right. There is not a single error over here. We are going to debit E and we are going to credit cash. But why? This is the question that you have to answer. Why we have okay, collected E. Okay, I've written it the wrong way around. This is cash debit and Mr. E credit. Sorry. You said we are going to debit the cash and credit, Mr. E. Sorry, my bad. I wrote it the wrong way. But why we have debiting the cash?
Because we are receiving the cash. E is receiving, no, we are receiving the cash.
And so what?
Increase in asset.
Very good. Very good. Very good. Agreed upon. And Mr. E,
Mr. E decrease in liability.
why?
No income.
Why? Decrease in income is debit. We have credited him over here. Decrease in income is a debit. We are crediting the Mr. E over here.
Expense.
Just call out all the names one by one.
I'm
Fine.
lost.
Hey, listen, it's okay. I'm sorry. I'm sorry. But try to see what just happened. What just happened over here? E was supposed to pay us, right? So that is why he paid us the money, na? I mean, out of the blue, nobody gives you the money, right? I mean, let's just talk about yourself. Is it so that your colleagues or your family members, no, family members, something else, but still, when we talk about the brothers or the sisters, we are the really the mean machines, basically, like, but still, if we talk about like, our relatives, our neighbors, our community, general public at large, nobody gives us the money for like anything or for free, right? Agreed upon. If somebody is giving us the money, if somebody is giving us the money, why they are going to give us the money? Because they were supposed to or they owed, right? That is what, na? That is
Yes.
why they are giving us the money, right? So over here, if I see it's written collected 180 from E, a debtor. Now, who's a debtor? From whom we have to receive. A debtor is a person or a party to whom we have sold the goods on credit and we have to receive the money, right? So that is why Mr. E is going to be a decrease in asset over here. Done? Okay. Without this one.
Paid wages, debit wages, credit cash.
Credit cash, you're asking or telling?
Telling.
Okay. So we are going to debit the wages and we are going to credit the cash. Why?
Wages because there's an increase in expense,
Very good.
and cash because there is a decrease in asset.
Oh my God, very good. Absolutely right. Very good. Good job. Good job. Decrease in asset. Very good. Very good. Okay. Because you have told me 100% accurately and with a pinpoint accuracy, I really appreciate it. And because of this, I'm so much happy. So that is why you have to tell me the next one as well. Come on, hurry up. Received rent bill of 700 from landlord G. Yeah.
Debit rent, credit landlord G.
Okay. So you have debited the rent expense and you have credited the landlord G. Why?
Rent because there's an increase in expense, and
Yeah.
G because there's an increase in liability.
Why liability? You are right. You are 100% right. I'm just asking why liability? Hmm. Because we have received it, right? We have not paid it yet. Done. Sooner or later, we have to pay. So sooner or later, if we have to pay, it's our liability, right? So that is why we are crediting the landlord G. Like for example, you come back from your office and in the car porch you see a rolled paper. When you open up the paper, that is the electricity bill, right? I mean, normally I get the electricity bills like this. The hawker, when he's delivering the bills out, what he does is he makes a roll of the paper, he bends it down and then throws it into the our porch area, na? So because of this, what happens while rolling, if there is a wind outside or something, the the rolled paper, it doesn't flow away with the wind and all, right? So what happens when I come back, right? By chance, if I see the paper over there before anybody else or something, right? So when I open it up, straight away I see that what is the amount of the bill and what is the due date, right? So even if I've received the bill, I have not paid it, but it doesn't mean I don't have to pay it something, right? The bill, if I have received, now it's my liability to pay it, right? Until and unless I don't get the bill, it's not my liability. Until and unless the bill is not generated, it's not my liability. But once the bill has been generated and all, it's going to be my liability to pay it off, right? Agreed upon? Now, we have Kunal. This one, second last.
We need to pay right $700, so we need to debit expense, all right? And
We
credit
need to pay.
to,
Listen, we need to pay or we have paid.
okay. We have paid rent of $700 to landlord G. So
Mm,
we have already incurred the expense.
mm,
So we debit the expense, the right account,
okay.
and then we credit the landlord. We credit
So you're
our bank.
saying Okay, so you're saying we should debit the rent, right?
Expense,
Okay, and we should credit what?
bank.
Bank. Okay, bank or cash? Let's write the cash over here because we have paid it. Now look over here. In the previous entry, all of you be attentive. In the previous entry, when we received the rent bill of 700, we have already recorded our rent expense over here. We have already recorded the rent expense over here. So now when we have paid, if we record the rent expense again, it will be a double recording. It will be a double recording, na? So it means we cannot record the rent expense again over here, because if we do, it will be a double recording. So technically we should not, or we cannot record the rent expense over here. So Kunal, tell me, if we cannot record the rent expense over here, then what should we do? Look,
Then we
while
should
record,
debit the landlord because there we
yes,
credited the landlord.
yes,
Yeah.
yes, very good. We should debit the landlord over here because we have already recorded the landlord over here as a liability over here, na? So when we are going to pay him, eventually our liability will reduce, right? So the landlord G is gonna debit and cash is gonna credit over here. Tell me the next one as well, Kunal. Paid insurance premium 90.
We debit the insurance premium account, and then we credit cash
Why?
because insurance premium is an expense,
Okay.
and cash we have paid by $90 by cash.
That is what?
Sorry, the insurance premium is a liability. We
How?
have decreased our because the premium we need to pay yearly, I believe, or
No,
monthly.
you have to pay. No. Normally you pay yearly. Okay, I agree upon. But why is it a liability? I mean, why is it a liability? Over here, I mean, if I talk about again, because it's not saying that you have to pay the insurance premium due, or you have to pay the insurance. It's saying paid insurance premium. You have already paid. Done.
Okay, it's an expense then.
Yes. It's gonna be an increase in expense, right? But why cash is credited? Why are we crediting the cash over here?
It's a decrease in asset.
Yes, it's a decrease in asset. Yes, it's a decrease in asset over here. Agreed upon. Done? Okay. Now, we have covered up this as well. I mean, the another exercise over here. Now, what we are going to do is we are going to get a break for like around 4-5 minutes. I just have to get up from the seat and I have to try and walk, right? And we are going to come back like after maximum 5 or 7 minutes. And then when we come back, we'll start with another exercise for the double entry, but with the double entry, we will start with an other concept as well, right? And that is going to be where we had this, the financial accounting definition, that it is the recording summarizing. Now, so we are done with the recording phase where we have double entries. Now we'll move towards the summarizing stage, right? So we're gonna come back after the break and we'll start that. What is the summarizing stage and what do we do over there, right? So let's have a break. Let's resume now. Okay, when we move forward from the recording to the summarizing stage. Now look, if I look at these transactions over here, right? Let's assume they have the amounts with them as well. Now, if I ask you that what are the total sales that we made in the whole week, in the whole month, in the whole year, how are you going to identify? If I ask that what is the amount of the total sales in the whole week or in the whole month or the whole year, what are you going to do or how are you going to do that? Obviously, you will have to look each and every, like, the double entry over here, right? And then you are going to identify the number of the sales that we have. Then you are going to individually add them all together and then you are going to tell me. Similarly, if I ask that what is the amount of the total cash that you have with you, right? I mean, you received the cash, then you paid the cash, then what is the net amount? So you will have to go again from the start to the end, and then you will have to identify the remaining amount of the cash, right? Now, practically in a whole year, 365 days a year, 24/7, you are going to have millions of transactions in a business. So every time you have to go down the million of transactions to identify that what's the amount of the cash that you are left with, or what is the amount of the cash that you total received, or what is the amount of the cash that you total paid and all, it's not going to be practically possible for you now. So that is where the summarizing stage comes in, or that is where it kicks in, right? And in the summarizing stage, we have this thing called as ledgers. Ledgers are called as the T accounts as well because technically its shape is like a T, right? Its shape is like a T. So that is why it's called as a T account, right? If we talk about the overall, you know, the format, or we talk about the areas over here, we have the date, narration, amount. Over here we have the date, narration, and amount, right? This whole left side and this whole right side. The whole left side is called as the debit side. This is called as the credit side, right? So what do? We record the transactions into the T accounts, right? Like for example, if you remember, we had this transaction that Mr. A started business with $10,000, right? Now, if I go over here, as far as the double entry is concerned, we are going to debit the cash with 10,000 and we are going to credit the capital with 10,000. That is the double entry now. Now, if I go from the recording point of view, we are going to have this one account over here. Right? And then we have another account over here. Right? I'm just randomly creating them over here. Now look, we debited the cash because it's an increase in asset. We are crediting the capital because it's an increase in capital. Now we'll go into the cash account. We'll create a cash account separately and we'll write business started 10,000 and then we'll go into the capital account. Capital is credited now. So I'll go into the credit side and I'll write cash investment 10,000. I can write business started cash only. I mean, if I want to write the cash only, I can write as well cash. I mean, at the end of the day, whatever narration you want to put in over here, you can, right? 2 to 3 words, whatever narration you want to put in, you can. I mean, there's no hard and fast rule about what narration to put and what not to put. You can write any narration you want to, right? So we'll have this on the debit side and this on the credit side. Now, let's say we write the next transaction, bought goods on, bought goods for cash 400. Now, the double entry for this is purchase debit 400, cash credit 400. We have a cash account, we have a capital account, but we don't have a purchase account. So we'll create a purchase account and we'll write for cash 400, on cash 400, or cash only. Whatever the way you want to write, you can. So we'll have in the purchase account cash over here. And then the cash is being credited now. We already have a cash account. So we'll go to the cash account. On the credit side, we'll write cash purchase 400, purchase 400, right? I mean, whatever again the narration you want to give, you can. If we already have an account, we'll use the account, the same account over here, right? And if we don't have an account, then we'll create and open the account, right? So this is what the approach we need to have. Just hold on for a second, please. Okay, right? So this is the approach that we need to have over here. Done? Okay. Now, moving forward, let's just go to the sheet 2 over here and let's just zoom it a bit like this. And then let me just copy up the question. Like this. And here we go. This is the exercise number 4 from your notes. I'll share the notes with you as well today after a while. Right? So, okay. Now, this is enter the following transactions into the appropriate account. So technically we have to create the accounts over here. And before I start, I am going to create some rough sketch of the accounts over here because we don't end up spending the time over here while creating the accounts. I am going to have some accounts over here as a standard so that we just take up the accounts and we start filling them up. Here we go. 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 And here we go. And then here. Right? Now, let's just start. Number 1, started business with 1,000 cash. So, Miss Amira, tell me what should be the double entry? Started business with 1,000 cash. Miss Amira? Miss Amira, you there? Okay, Miss Meher?
Debit cash because it is an asset. Credit
Okay.
capital because capital is increasing.
Yeah, exactly. So we are going to debit the cash over here with 1,000 and then we are going to credit the capital with 1,000 over here, right? Now, the secret for the successful recording and all and everything is that as soon as you pass the double entry, straight away go and put it into the account. So we'll have one cash account over here The cash is debiting, so we'll write on the debit side, business started 1,000 here, and then we'll go to the capital account and we'll go over here, investment, or we can write it as a cash as well, 1,000, right? On the credit side. Done. So I'll have the recording in the cash, I'll have the recording in the capital account as well. Then, Pagwa, the second one.
We debit bank credit cash.
Why?
Debit bank because it's an increase in asset.
Yes.
Credit cash because the decrease in asset.
Yes, agreed upon. Very good. Absolutely right. Basically, what happened over here, we paid 900 of the opening cash into the bank, now. So whatever the cash 900 we had, we opened the bank account with that. Now we have a cash account, we have a capital account, but we don't have a bank account. So we'll go over here as a bank account over here and we'll write cash deposit 900. We'll go to the bank cash account and we'll write bank deposit 900. See, now if I'm reading the cash account and I look on the right side, it's clear to me that what is this 900 belonging to? It's the amount with which I opened the bank account. And if I go into the bank, I look into the debit side and I read this amount, I have the reference that I made a cash deposit in the account, right? So it's clear to me what just happened over here just by writing the two words. Then we have Umi. Umi there. Bought goods on credit 78 from S Homes.
We debit purchases because increase in expenses,
Okay.
and we credit the S funds
Yeah. Why? Hmm.
increase in liability.
Increase in liability. Why increase in liability? Because we have bought the goods on credit, right? So that's why it's a liability over here, right? Very good. Now, if you look over here, we don't have a purchase account and we don't have a S Homes account, right? So we'll go over here. I'll write it up. Purchase account from S Homes 78. Then we are going to have the S Homes account over here. And then we'll write credit purchase 78, right? So purchase to S Homes entry complete. Then we'll go over here for the D. And we have without with us. Bought a van by check 500. Yes.
Debit van credit bank
Why?
because van it is an increase in asset and bank is a decrease in asset.
Absolutely right. Very good. Now, we don't have a van account now, so we'll go over here. We'll open up a van account via check. We'll go to the bank account and we'll write van bought 500. Right? Then the next one. Bought goods for cash. Yes, Kunal. Kunal. Kunal, you there?
Yes, sorry. Bought goods for cash, $55.
Yeah.
We debit our purchases account,
Yeah.
and then we credit our cash account.
Yes, absolutely right. Why?
Purchases because we have incurred an expense,
Yes, very good.
and
Very good.
cash we have credited because we have decreased our asset.
Very good. Very good. Absolutely right. So we don't have a purchase account over here, so we'll go and open up the purchase account, right? I guess we have a purchase account. Oh, we have a purchase account, sorry. We'll go over here. Purchase account is over here. For cash, 55, right? The purchase account is already over here. So we'll enter into the purchase account. And then the cash is over here. We'll go over here. And then we'll write cash purchase 55. Right? Done. And then the next one is sold goods on credit 98 to D more. Miss Amira, are you back?
Yes, I'm sorry.
No, it's okay. It's perfectly fine. So tell me, we have where were we? Sold goods on credit 98 to D more. The double entry.
We debit D more and we credit sales. We debit D more since it will be an increase in asset when we receive cash from him, and we credit sales since it is an increase in income.
Yes, absolutely right. So we'll have the D more to sales, right? Now, if I go over here, we don't have a sales account, we don't have a D more account. So we'll go, this is going to be D more account. We'll write credit sales 98. We'll go to the sales account. On credit to D more, or we can write simply to D more 98. Right? Done? Okay. Now, return goods to S Homes. Mihir.
Debit has homes, credit purchases return. Debit has home because it is a it is an increase in
Increase or decrease?
a decrease in liability.
Yes, very good, very good,
And
very good.
purchases return because it is a decrease in expense.
Yes, very good. Now, we have S Homes account. We'll go on the debit side and we'll write returned 18. Now we have a purchase account, but for the purchase return, we'll open up a separate account. Right? And we'll go on the credit side and we'll write to S Homes 18. Now, logically speaking, if we see this is the S Homes account, when we bought the goods, we credited his account. When we returned, we debited his account. So why the purchase are recorded on the debit side, but when the return comes, rather than writing on the credit side, I am opening up a separate account. I mean, if we talk about from the purchase point of view, right? When I ask this question, the answer to it is we have IAS 1, International Accounting Standard number 1, presentation of financial statements. This standard forbids us to net off the expense or to net off the income, right? And the standard says you have to clearly show to the user regarding the idea that if there have been some returns during the year or not, right? Because it is going to give you the idea about what is happening to as far as your business is concerned, right? So that is why the returns, be it for the sales, be it for the purchase, this is a separate transaction now, so you have to record them separately into the separate accounts. Although the net sales or the net purchase are gonna be when they are going to be presented on the face, we are going to write the sales and then less sales return, or we'll give the reference to the working, and in the working we are going to show that these are the total sales, these are the total returns, and these are the net sales. Although we are going to do that, but in the books, we are not allowed to net them off, right? We have to show to the user of financial statement as well that what have been the total sales and what have been the total returns as well, right? So that is why we are recording it separately over here as well, right? Okay. Then after the return, we have what? Sold goods for cash 28. Yes, I have Pagwa. This is Pagwa's turn, right?
We debit cash because it is an increase in asset, and we credit sales because it is an increase in income.
Very good. Cash to sales. So I'll go to the cash account and I'll write cash sale 28. I have my sales account on cash 28, right? Cash on the debit side, sales on the credit side. Then I have bought fixtures on credit from Kingston Equipment 150. We have Umi.
Both fixtures on credit, debit fixtures because increase in assets,
Yeah.
and credit Kingston equipment, increase in liability.
Yes, agreed upon. Yes, you are absolutely right. We are going to debit the fixtures over here 150 because it's an increase in asset, and Kingston Equipment, this is going to have a credit because this is an increase in liability. Do you guys know what is a fixture is? Normally we write it together with the furniture and the fixtures. But what is a fixture? What is a fixture? Any idea? Normally the total word is furniture and fixtures, or fixtures and furniture. But what is a fixture? No idea? Okay. You go to a store, either you go to a general store as well. You have the aisles over there, the racks over there where the goods are placed. Now, those racks or the aisles, they are called as a fixture. You go to a brand shop and they have the clothes hanging over there in some sort of a rack, or they have the shelves where they have placed the, like, the clothes and all. So those shelves, those hanging bars and all, they're collectively called as the fixtures. Okay. Now we don't have a fixture, we don't have a Kingston company now. So this is going to be Kingston Equipment fixture on credit 150. Then we have furniture and fixture account. This is from Kingston 150. Then D. Watson lent us 100, paying us the money by check. Without.
Debit cash and credit loan.
Okay. D. Watson lent us the 100, paying us the money by check. He has given us a check. Debit bank, not cash, right? Because we got the check now, so check is going to go into the bank, right? So debit bank, and credit, we are going to credit the D. Watson's loan account over here with 100. Okay. D. Watson loan account 100 is going to be over here. Done. So we'll go to the bank account and we'll write loan from D. Watson 100. Then we'll go over here. We'll open up the Watson loan account. Right? Loan received 100. Then We paid S Holmes his account by check 60. Yes, Kunal.
We have decreased our liability, so we debit as Holmes,
Hmm.
and we paid by check, so we credit our bank.
Yes, very good. So we have the double entry as S Holmes to bank. We'll go to the bank account, paid to S Holmes 60. Then we'll go over here and we'll write check paid 60. Done. And then the last one is we paid Kingston Company Equipment by check 150. Amira,
We debit Kingston account and we credit bank. We
absolutely
debit
right.
it is a decrease in liability and it is a decrease in asset for bank.
Yes, absolutely right. Very good. So we'll go to the bank, paid to Kingston 150. Then we'll go to the Kingston Company account. Here's Kingston. Check paid 150, right? Okay, so we were left with these. So simply delete them out. Okay, now, second step. When we are done with as far as the accounts are concerned, now what we are going to do is we are going to balance off the accounts, right? We are going to balance off the accounts over here at the end of the day, right? I mean, at the end of the day means at the end of the year, we have to balance off the accounts. Done? Now, in order to balance them up, we are going to have them act like, a manual balance. Have you seen the manual balance on the shops where the shopkeeper, I mean, if we ask for the sugar, say in case we are at shop and we ask that we need 1 kg sugar, and say in case if he doesn't have the packed sugar or something, what he does it that he puts on the weight on one side of the scale, and then on the other side in a bag he starts to fill up the sugar, right? And when it balances, right, it balances, then he gives away the sugars that stating that it is now 1 kg, here you go, right? Normally we have seen that now. So same concept is going to be applied over here, that if I look over here, if I do the sum over here, the total is 1028. So if it's a balance, the same balance has to be on the other side as well, right? So same balance has to be over here on this side as well. Done. But I already have certain amount over here. 955 is already over here. I have to take it to the 1028. So how much more balance do I have to put in to make it 1028? So it's gonna be, I mean, if I say this is 1028 minus this and minus this, it becomes 73. And if I go, this becomes 1028, right? Similarly, if I look at the bank account, I have a total of 1000 over here, right? So I need to have 1000 over here on this side. But over here, I have 710. So how much more balance do I require? Obviously, I require the difference between these, and that's going to be 290. Similarly, if I look over here in the purchase, the balance over here is 133. I need to have the 133 over here, so it means I need to put in the balance of 133 on this side. Similarly, for the capital, I have a total of 1000 over here. I have to have a 1000 over here, so I need to have a balance of 1000 here. If I look at the S homes, this is 78. This is 78. It's already balanced, so no balance is going to be put in over here because this account is already balanced, so I don't have to put any balance over here. For this, I have 500. I need to have 500 over here as well. So I need to put in the balance of 500 over here. Similarly for D more, this is 98, 98, and the balance is gonna be 98. Similarly over here, this is 126, 126. I need to have the balance of 126. S Holmes 18 for the purchase account. Sorry, this is purchase return account. This is not the purchase, this is the purchase return account. This is going to be purchase return account. So the balance is 18, right? For Kingston Company, this is 150 and the same 150 is over here. So no balance over here. We need to have a balance of 150 over here. So this is going to be the balance. Similarly over here, it's 100, it's 100, and then we have a balance of 100 over here, right? So first thing which we have learned so far is to balance of the accounts. Now, one more thing. Today is what? 24th or 25th? Today is 24th of January. When the 31st December ended and when the 1st January started, the new year started, right? The car at that time, if you haven't upgraded it or haven't changed it, the car that you had on the 31st December, you still have that car. The bike, if you had at that time, you still have that. The house that you had, you still have that as well. So it means, irrespective of the year, if you had some sort of an asset, it still exists with you, right? Similarly, if you owed some money to the bank or to your friend or to your family, by the end of the year and the start of the next year, you still had that balance which you were supposed to pay. It's not that the new year came in and all of the balances vanished, right? So it still remained over there, irrespective. Similarly, if you had some business on 31st December, you still have that business with you. With the new year, the business didn't end, you still have that as well. So it means the asset, the liability, and the capital, they go on a roll-on basis from one year to the next, then from the next to the next, right? They never close. They go on from one year to the next and then to the next and to the next as well. So it means if my account is ending over here, I had a total of 1028 with me, out of which I have paid 955 and I'm left with 73. So in the next period, when I move forward, I'll have this balance with me. So this balance is carried to the next period. So this is called as C/D. C/D means this is carried down, right? This is a carried down balance over here. Similarly, bank is an asset. This is going to be a carried down balance. Now, when the year ended, when the January's month started, did you get your salary for the January? Your employer didn't say, nah, that is a happy new year. So happy new year, I'm not going to pay you, right? Because it's a new year, so you're not going to get any salary or something. It doesn't happen this way. It doesn't happen this way, nah? Right? Because your employer says, I gave you the salary in the December, right? Remember? So you have that with you. So it's a happy new year. So enjoy with that salary. So what's gonna your response be? That was a salary that I got in the previous month. Now I need to have the salary again so that I can meet with my expenses as well. Because if you get the bill in the December, it's not that you're not going to get the new bill in the January. The month ended, the story ended. It's a new month, it's a new start, it's a new story, it's a new expense, right? So basically what happens that with the new year, with the new month, with the new start, you have new expenses, you have new income, right? So remember, the expense or income, they don't go on a roll-on basis. The time ends, the period ends, they end. A new start, a new expense, a new income. Therefore, for the purchase, we are going to have a closing balance. CL dot BAL is called closing balance over here. Done? Similarly, now if I go ahead, the capital is a carried on balance. Assumes no balance. When is a carried on balance? D more is our asset. So this is going to be a balance carried down. Sales is income. So we have a closing balance. Purchase return is decrease in expense. So closing balance. Similarly, Kingston go on. Then we have the furniture. This is going to be a balance carried down. D Watson is a liability balance carried down. Right? So this is what we have over here. Then one more thing. If we say the asset and expense, they always have a debit balance, liability, capital, income. They always have a credit balance. See, this is a purchase and expense. This balance is over here because of this side, right? So this is the debit balance. This is a debit balance. Bank is an asset. This is going to be a debit balance, right? I'm writing it with the green. Cash is an asset. It's a debit balance, right? I'm writing the debit with the green color. Similarly, if I go van is an asset, it's going to be a debit balance. Purchase, return, and sales, they're not going to be over here. D more is an asset, so it's a debit balance. Then fixture and furniture, debit balance. Now, as far as the capital, liability, and income is concerned, this is going to be a credit balance, right? So I have my capital, credit balance. I have my sales, credit balance. Purchase return, decrease in expense, credit. Similarly, we have loan over here. So this is going to be a credit balance over here, right? So the next thing which we learned is the debit and the credit balance. Now, the definition of the accounting is it's a recording, summarizing, and presentation. Summarizing stage, we came up with the accounts. Now, the bridge between the presentation and summarizing stage, it's called as a trial balance. It's called a trial balance. What do we do? It has two columns. One is called as a debit, one is called as a credit. Once we have created the accounts, what do? We put up the balances into the trial balance. All the balances, they go into the trial balance, right? Like, for example, we have the bank over here. So bank has a debit balance of 290. It will go on the debit side. We have a purchase. The purchase has a debit balance of 133. We have a cash account with a balance of 73. So 73 is going to be over here. Then we have a capital account with a 1000. It's a credit balance, so it will go on the credit side. Similarly, after the credit capital, we have S Homes no balance. Then we have a van with a debit balance of 500 over here. Then we have D more account. D more is a debit balance of 98 over here. Then we have sales with a credit balance of 126. We have purchase return with a credit balance of 18. Then we have Kingston equipment, no balance, furniture and fixture. Fixture has a debit balance of 150. And then we have D Watson, the loan account with 100. Right, so we have written the balances on the debit column and the credit column as well. Right now, we are going to do the total of the columns. We are going to do the total of the debit and the credit column. And if what we have learned so far. On the basis of that, I'm saying this statement. What we have learned so far, I'm saying on that statement, I'm saying on that basis. I'm stressing this point. What we have learned so far. If the balances are equal, it means the double entry is 100% accurate and we are good to go for the accounts. Right? So we'll go over here. Sum. This is 1244. So it has to be 1244 over here as well. So if it is 1244 over here, so it means the accounts are balanced, everything is okay, and we are good to go with as far as the preparation of the accounts are concerned, right? So if the trial balance balances, it means everything is correct over here. Done? Okay. So this is what we have over here for the day. I won't push and rush. Let's just stop over here for the day. Now, if any one of you have any question or something, you can ask me. Otherwise, we are done. Nothing more to be done today. Okay. Now, let me just share a screen with you. Here we go. Now, I'll be sharing these notes with you. These are called as the Financial Accounting Volume 1 Set 2. And yes, I have shared it with you. I mean, if you go to the Academy's portal, where you have the access to the recorded lecture now, over there is a chapter called as the notes. In those notes, you will find this Financial Accounting Volume 1 Set 2. Scroll down, you'll go to the chapter 3, double entry bookkeeping. If I come down, we have done this activity over here, bought machine on credit from A, B, C, D, landlord G. Then this practice question number 1, practice question number 2, right? These are done. Then this exercise number 4 is done as well, along with the 3 as well. Right now, homework. This exercise number 5 and this exercise number 6. These two exercises are your homework. You are going to pass the double entry. Then you are going to create a T account. You are going to balance of the T account. And then you are going to create a trial balance as well. The same which I have created over there on the Excel file, right? For the question number 5 and for the question number 6. And once you are done, you are supposed to send it to me on the WhatsApp. Okay. The financial accounting group has been created. I saw that today, right? But rather it has been created yesterday, if I'm not wrong. So the group has been created for the financial accounting. You'll have my number from there as well. And once you are done, you have to share your homework over there with me. Try to send it into an Excel file. You are supposed to do it onto the Excel the way I've done it today. Okay. Let me just go back. Like the way I did for the debit credit columns and the colors as well, and then the trial balance and everything with the double entry and with the question as well. So do this the way I did and then share it with me. We have the class on the Friday, right? So it doesn't mean that you're going to send it to me on the Friday. I need it maximum by Tuesday or Wednesday. I need it maximum by Tuesday or Wednesday so I can sit, I can see, I can assess what you have done. Right? So make sure you share it with me in a timely fashion. Done? I hope everything is clear now. Okay. Now, anyone has any question or something, please let me know. Okay, it seems to be all good. Everyone's silent, huh? I'll share and upload this file as well onto the Academy's portal so that you can have an access over there. And then you can look around at what we have done, right? So it's time to say bye. In the next class, we will start with a newer topic and we'll go through it again properly. And then we'll start with a new theme and chapter as well. And then we'll try to cover it up in the very next class as well at the same time. And for that, you will have to wait for the next week. Nothing much, only 2 questions for the homework. And please do get it done, okay? And till we meet again, you have to take care of yourself, your family, your friends, and the people around you. And till we meet again, time to say bye. Bye bye.